Next up, we have a very interesting session coming up on regulatory changes. To moderate this session, I invite Mr. Ashish Jawar, BOG of IIM MADRAS, to please come on stage.
Good evening, ladies and gentlemen. So the topic we have in hand is regulatory changes and the role of next IA, or the role of next generation IA. But when I ask this to myself, I think I'm inquisitive to understand and also know from the audience here, do we know the role of the current generation before we even go to the next generation? Because it's such a vast topic that we are going to be talking about. And to do the honors, what better than these two eminent speakers who have made a lot of difference in our lives. And I'm saying that with the full humility, and very soon you will realize once I introduce these two eminent speakers as to how they have made a difference in each of our lives here in some way or another. So please put your hands together. First for Mr. Alex Chandy. Welcome on stage, please. I welcome MPV sir. So Mr. Vijayakumar sir, popularly known as MPV. Please welcome sir. Thank you. So we know AstraZeneca for what? Sorry? Vaccine. Yes, so somewhere or another we would have had either a Covishield or Covaxin, right? So we know AstraZeneca for one reason, which is Covishield, and now we will know AstraZeneca for another reason, because Mr. Alex is the head of legal and sustainability from AstraZeneca. So in his current role, he is responsible for managing all the legal affairs of AstraZeneca. And by qualification, he's a postgraduate in law and a qualified company secretary. With 20 years of experience, clearly with the lawyers, you can understand they are very good negotiators, right? They are very good influencers. I don't know how good they are motivators, but they definitely are pragmatic leaders. So please welcome with a round of applause, Mr. Alex. Thank you. So I didn't know I will get this opportunity to introduce a celebrity speaker here, Mr. MPV sir. So I'm sure many people in this audience have been his students, right? So I have been personally a student of him, and today if I have an honor to introduce him, definitely I'll add a little more personal experience of mine as he is a celebrity speaker. So people talk of a lot of achievements, etc., etc. The biggest transformation, since morning we have heard of data, digitalization. I come from Barclays Bank. Of course, digitalization is a buzzword. Forget that. The real transformation which this man has done is in the life of 85,000 students, ladies and gentlemen. He has taught 85,000 students, of which more than 25,000 people have become chartered accountants. So that's the kind of literally skilling and employability which Mr. MPV sir has got in life, right? So with that kind of track record, needless to say, MPV sir comes with 30 years of experience. He's authored 8 widely researched and noted books for students, for leaders and everybody. Not to introduce him, that I would like to say his accolades of the directorships that he holds, but more for us to feel proud about that someone from our fraternity is a director at the LIC Corporation of India, right? Clearly where yours and my savings are there for insurance, so we have a good man there. We have him as an independent director in Geojit Financial Services, where I use online trading platforms for, so thank you sir for being vigilant there. We have him in Heritage Foods India Limited, another public listed company of which you eat, and I eat a lot of curd, paneer, etc. So he's taking care of our health, our wealth, our insurance. So, and he's taken care of our education. So what more better can we say for? And also the man who made us study a lot of accounting standards, because he's an ICAI Council Central member. So you can imagine if he's kept us on our toes for enough of education, or if you want to even blame him, sir, why so many accounting standards, right? So it's a double-edged sword. So with that note, I would like to please welcome first Mr. Alex on stage, so that he could please share his experience. The format of this round we would like to do is, while we have 1 hour, we are now exactly at 4 o'clock. We would like to hear as much as possible with both of them. We'll try to take as many questions as possible, right? Let's keep it that way. So over to you, Alex.
Good evening, everyone. Thank you for having me here. Hey, thanks, Ashish, for those kind words. I might be the odd man out here, a lawyer with a bunch of chartered accountants. Normally, I'm on the other side always, negotiating with my internal auditors whether a finding should be a finding or it is an improvement opportunity. So the topic today is on regulatory changes. Okay. So if we are living in a very fast-paced, environment where business is changing rapidly, business models are changing very rapidly. But if you look at the regulations, normally regulation normally do a catching up business. So we find changes happening. Then after a long time, the regulation sort of comes up with new regulations, and the organization sort of struggle in between what should I do, how do I ensure compliance, etc. Some examples are, for example, when we spoke about cryptocurrency, right? I mean, cryptocurrency is a good example where cryptocurrency is launched, coins are launched. We really don't know whether it is legal tender, whether it is legal to do trading or transact in cryptocurrencies. So, another example could be when COVID came in. Take the example of a unit functioning in SZZ unit. COVID forced all of us back home to work from home, whereas the regulations required us to, continue to work from office. There are restrictions in taking our assets out, etc. So that's another scenario where, there is a regulation, but there is an ambiguity sometimes in terms of, whether it is possible to comply, what is applicability of those regulations. Right. So, in this background, if you look at it, what is the consequence of non-compliance of regulations? So, if you see, most of these regulations come with either a penal consequence, a criminal consequence. It could also be a reputational consequence. And therefore, today, if you look at the board of any organization, one of the top risk items is compliance to regulatory requirements. Board is very concerned in an environment where I have ambiguity in regulation, where I have multitude of regulations. How do you make sure that I comply with these regulations, right? So typically, if you look at a company which is operating in India, would anyone like to take a guess in terms of how many compliance line items would be there, in a year which a company need to comply with? More than 10,000. Okay. Typically, on an average company, if you look at the line items, it should be around 4,000 to around 12,000, depending upon the nature of the business you need to carry on, right? And that brings us to the question which someone asked me, Alex, is it actually is a burden, or is it a distraction for organization, for businesses, or is it actually something good? What do you guys think? Is it a distraction, or is it something good to have so many regulations and compliances? Good? Yeah. So one of the reasons why we have these regulations, it's not just because I'm a lawyer, but one of the reasons why we have all these regulations is to ensure that we do things the right way, we do things the ethical way. A small example could be, why do we have traffic lights? Traffic lights are essential to ensure that there is an order in what we do. Similarly, all the regulations which we have, in some way or the other, it connects to something good. For example, most of the regulations which we talk about are either for example, health and safety of employees. Financial sector is regulated. It is to ensure that people don't siphon with our money. So all these regulations in some way or the other are intended to be good, right? So the last point which I want to talk about is expectation from the board and management. Today, as I said, the board relies significantly on internal auditors to give an assurance in terms of what is the in terms of the maturity of the compliance, how because of the multitude of compliances which a company is required to follow, because of the consequences of non-compliance, board relied significantly on internal auditors to sort of give an assurance in terms of how the second line is performing. For example, if there is a compliance team, if there is an internal auditors, they depend upon the internal auditors to sort of give an assurance in terms of how their second line is functioning. So if you look at as an internal auditor, internal auditor, how do you, if you want to approach and do a maturity assessment in terms of where does this organization stand in terms of regulatory compliance? If there is a mandate from the board that you need to, can you please give us a comfort that the regulatory compliance is in order? How do you approach this? So one of the first things to look at is whether there is a compliance leader, whether there is a person who is designated as a compliance leader, if there is one person who is identified to ensure that the various statutory compliances, etc., are met. The second point is to look at what is the culture of the organization. For example, what is the management philosophy around compliance? Today, if you look at compliance, all these various statutory compliances are spread across the multiple functions within the organization. For example, you would have a set of compliances under finance, you would have a set of compliances under the human resources team, a set of compliance under the health, safety and environment team, a set of compliance under the secretarial team. So how serious are all these functional leaders to make sure the compliances under the respective team is actually happening? So this is an important element. The message from the top is a very important element to determine how the organization and the various team takes compliance seriously. The next point is in terms of to identify whether the organization has a compliant management process. This would mean that whether the organization has identified and mapped the various compliances which is applicable to them. This could be a manual process, or today there are multiple tools which people use to map compliances. So if as an organization, if you have mapped various compliances and there are processes put in place to ensure that people follow those, update those compliances, and there is a reporting mechanism, there is a review mechanism, the reporting mechanism to the board, that is a good, that is one of the starting points, to build a strong foundation for statutory compliance monitoring. Next is, once you have a process, or once you build a checklist or whatever you want to call it, then how dynamic it is, because law, as you know, is very, it changes very fast. An existing requirement could be modified, or there could be a lot of new regulations which might be added to the existing compliant management framework. Do the company has a process where these compliance are identified in real time, and then it get updated to the respective teams, and it also get updated in the system? This is an important element. One of the things which we experience normally is that we have a compliance management process, we identify the compliances, but we forget to sort of update the the new changes which come in the organization. The last one is how agile is the process. It works in terms of how quickly this can adapt to a sudden change, etc. For example, one of the examples could be, again going back to the COVID example, there are new scenarios which could erupt, like remote working is a good example. So normally, the compliance framework is built in such a way that we look at office, which is a controlled environment. So a lot of compliance are built around that. But suddenly, when everyone wants to go back and work from home, it's a very uncontrolled environment. What are the compliances you put in place? How agile is your compliance management system to sort of adapt to such changes? These are some of the high-level, methods in which an internal auditor can sort of assess the, the robustness of the compliance management system in an organization. Go to the next slide. Okay. These are some of the list of some of the emerging regulatory risk areas. Some of them are existing. For example, antitrust and competition law. These are significant in the sense that the consequence of a violation around some of these regulations can be significant for the organization. Third party risk management, which includes anti-bribery and anti-corruption. Today, a corruption in one geography could have, a ramification effect on, your global organization. Data privacy and cyber security. Cyber security, is pretty much now very active. Data privacy, we have an upcoming law. IP rights is a significant asset for many organizations. Compliance around IP rights. ESG, ESG is, as a lot of people have already spoken about ESG. It is an emerging area, a lot of reporting requirements under ESG. How does the company take care of the environment? Tax and tax-free zones, the regulations under that. Tech innovation related, AI and ethics is a big topic. When you train your algorithms, how the integrity of a data sets, how do they operate, the fair principles around that. Business continuity, the last point, business continuity is also a statutory requirement in many contexts today. So these are some of the emerging areas from a regulatory standpoint for an internal auditor to keep a watch out for. Okay, my last slide, this is internal auditors, from a regulatory standpoint, what is the way forward, or what is likely to happen in the next future, coming future. One is pretty much the agenda for internal audit, it is likely to get expanded, new areas are likely to get added, ESG, data privacy are some of the themes which is likely to get added in the agenda for internal auditors. Scope for audit, the management pretty much expects, the existing areas, new standards are likely to be added to the existing areas. And also, the management would also expect internal auditors give some assurance on some of the new areas like ESG, data privacy, etc. Audit skills, see today if you see typically an auditor, internal auditor is somebody who's an expert in accounting, somebody who's expertise in fraud detection, control testing, etc. Going forward, we would see a trend of lot of technology being used, data analytics, artificial intelligence, etc. would be used for auditing purpose. But as you move up the pyramid, we'll see we might expect, management might expect people with more skills than traditional auditing skills, like somebody who's good in data privacy, somebody who's good in technology, artificial intelligence. These are some of the emerging skill set which would be required for internal auditors. Privacy compliance will be a key focus area. As I said, India is, we have a draft new law recently published. We have been waiting for a new law around this. So, from an internal auditor standpoint, this could be a focus area for management. And cyber security is another area where management would be key to have more involvement of the internal auditors to sort of certify or give some assurance in terms of how are the controls around the cyber security. That's it from me. Thank you, everyone. We take questions from the end if there are any.
How about taking the questions after the briefing of MPV, sir? Is that okay? Because I've already got around about 4 or 5 questions during the day. Because as auditors, I like to ask questions. So I've prepared with questions, which some of you all have already shared with me. But we'll take it after MPV sir's briefing. Yeah? Thank you.
Thanks, Alex, for that wonderful introduction to the topic. So greetings to all, and sincere thanks to Ravi for the invite to be here this afternoon with all of you. On the topic, let me begin with 2 statements, which are more or less like 2 principles which I have believed in and have practiced right through my career, more so in the last 15 years as an executive. First and foremost, as far as the regulatory framework is concerned, I think there is a question as to whether having regulatory framework is good, desirable, not desirable, and all. I don't think any of us need to blink on it. My view is it is an emphatic good. It's good to have a good regulatory framework, in which business needs to be carried on. And it's so true for every walk of life. It's true for every walk of life. Even if you want to cross a road or drive 10 kilometers on a road, it's always good to have a set of codified practices. It's safe. It helps you to grow very systematically. So it's always good to have a regulatory framework. What is important is to have a good regulatory framework. So, and that good regulatory framework most often will actually evolve over time. Ultimately, it's humans who actually draft the regulatory framework, and it is based on those set of individuals' experience that the regulatory framework gets drawn out. Very rarely you will have a situation like someone as tall like Dr. Ambedkar drafting a constitution which stands the test of time, 75 years, so many changes have happened, but the constitution has stood the test of time. It's very unlikely that you will have situations where any legislation or regulatory framework can be drafted with that kind of a foresight, that kind of a quality. So most of them will only evolve over a period of time. But bottom line, it's good always to have a regulatory framework, else it is going to be chaos, imperfection to the extent that whoever is stronger, not in the sense of right business practice, will only try. And on compliance or regulatory framework and compliance, my own 2 cents for all of you, and maybe some of you heard me on this. Compliance is always burdensome. It is costly. It's not easy. It is difficult. It is certainly difficult, but try non-compliance. It is fatal. So when you have a non-compliance business practice, one pollution incident, one fire accident incident can shut down the whole operations, bring down a billion-dollar organization to the ground, factories to be shut down, unemployment, so on and so forth. So if you look at the consequence of a non-compliance, it's much more easier to comply with. Very simple, closer to personal life. Driving a two-wheeler without a helmet and with a helmet. With helmet, it is tough, but one accident, one occasion, and it can be fatal, and that's compliance. I'm elaborating this in so much detail for the reason that most of you here actually represent the future of the profession. All of you are in your late 20s or early 30s, majority of you, and if I look at the average age, it's looking like early 30s, and you all actually represent the future of internal audit. And it's very important that at this age, you start accepting the good reality that compliance is a good habit. It's good to be a compliant one because, as I said a little while earlier, non-compliance is fatal. The second principle which I have practiced and which I'd like to share is, many occasions, particularly during my days when I was in practice as a chartered accountant, for about 9 years I was in practice, most organizations I have seen, compliance is seen as a responsibility of a compliance officer, a compliance team, or a compliance organization. A team of 3 people, 5 people, 10 people, they are identified as people who are responsible for compliance function. The moment an organization follows that model will only end up with compliance on paper, checklist-based approach, but it will not become the DNA of the organization. So compliance will be effective only if you run an organizational behavior where every individual across the organization, including the vendor ecosystem, accepts the culture that complying with a regulatory framework, practicing business or doing business within the regulatory framework is good. You may have to sacrifice maybe some 200 basis points of growth rate or 300 basis points of growth rate, but that sacrifice of 2-3% of growth rate is worth it than trying to grow where you have a organization which is nothing but people and its vendors and ecosystem who do not have complaints and an understanding of regulation as their ethos. Having said these two in the context of the topic which you have, I just want to leave one observation relating to the environment in which all of us are now functioning, more so the younger people, the future of internal audit. Ram Kumar and myself have lost our hair. We have spent about 30 years of our career. Between the time we started our career to now, 30 years, we have moved from a $1 trillion economy to a $3 trillion economy. 30 years. And from now to 2027, I think all of us have very strong conviction that we will certainly be 5. And by 2030, if not 2032, we'll surely be a $10 trillion economy, and none have a doubt on this. I don't think anybody has a doubt on India being a $10 trillion economy. I'm sharing these facts for a reason. And today when the chief guest, Mr. Muruganandam, was there, he talked about Tamil Nadu itself having an aspiration of a $1 trillion economy by 2030. We are currently about $375 billion, and 1 trillion by 2030 will happen. Whether we like it or not, it will surely happen. Now, Tamil Nadu as a GDP, let's take Tamil Nadu itself as an example. We are almost 10% of the nation's GDP. Almost 10%. 8.9 whatever percentage. In 2030, at $1 trillion, at 10%, Tamil Nadu maintaining the second largest GDP behind Maharashtra. $10 trillion is a reality, Now, why am I highlighting so much? I'm highlighting for the reason that in the last 30 years, when we had a $2 trillion economic growth, we have seen in our life the number of business failures, economic frauds, management frauds, systemic risks. All of this we have witnessed in the last 30 years when we moved from just 1 to 3, just $2 trillion increase, and we saw so many things happening. Now imagine $7 trillion of absolute number increase in next 8 years, 7, 8, 9 years. Look at the kind of risk which will be there as part of that particular increase in that GDP size. For 2 trillion, we have seen all kinds of situations and we have struggled to manage many of them. Look at something as simple as what Mr. Muruganandam mentioned. While all of us talk about risk management, enterprise risk management and all, we all have our supply chain risk lying on everything relating to electronics in one country, 1.5 country, one supplier, 1.5 suppliers, and all of us claim ourselves as risk managers. Now, when we look at the $7 trillion absolute increase in the GDP, the kind of business risk which will be there, the kind of fraud risk which will be there, will call for a different level of IA specialization for us to live through this $7 trillion growth. And also important to realize that when you have such a high growth economy which will happen, the regulatory environment will also scale up, and there will be lots of oscillation also which you will witness. As we move from a developing economy stage to a developed economy stage, the regulators are unlikely to remain silent. They will also learn in the process. They will also introduce something, withdraw something, introduce something, withdraw something. Take some things like the related party transactions. You have almost all the regulators having their own views of what related party transactions are and how they should be governed. Similarly, there's a recent document of SEBI on material information or material developments, communication to the market. So they're looking at anything which is material to be immediately brought to the market's attention. So these kind of regulatory reactions, most of them reactive in nature, we will only get to see more and more happening in the foreseeable future until we reach a fairly stable stage, which is not less than 10 years from now. So if any of us thought the regulatory framework, we have seen enough changes and it's more or less settling down, that's not the case. There will be more and more regulatory changes. And also look at the kind of large economic powerhouses which are getting established across the world, whether it is Meta, Microsoft, Amazon, or Apple. All of these are in a position where they almost dictate the economy of the world and also the views which emerge. So countries are all grappling on how do we handle such large monolithic organizations. Countries are all struggling. They just don't know how to regulate them. I think in Aparna's presentation, nations are doing their own little bit on addressing some of these risks. Recall the risk relating to Visa and MasterCard. That risk India offset by having its rupee, and we all know how much of resistance was there to introduce rupee. But as Ramkumar was mentioning, and I fully endorse what you are saying, RBI is an unsung hero in the media, but professionals like us have always held RBI at very high esteem. In fact, if you look at almost every country in the world now, they are battling high rates of inflation and high interest rates, and most of these central banks in those countries do not have the experience in the last 40-50 years of how to handle a high inflation or a high interest rate scenario. They are going through a trial and error. Contrast that with a central bank like the Reserve Bank of India. It's handling it in such a mature manner, and if the whole world says India is the sole bright spot, it's because of these reasons. But having said this, as regulators, they are continuously under scrutiny and continuously working on what kind of policy initiatives need to be taken for a country where we will have a good wealth distribution as well and not concentrated. So for all the youngsters who are here, if all of you thought the regulatory landscape is tough, let me share with you, the next 10 years will be even more tougher. There will be lots of changes which will happen, and for right reason. I have myself been part of a regulatory framework, but one good point I'd like to say, whether it's my experience of working with MCA or RBI or SEBI, one good experience I'd like to share. In all the instances where I had opportunity to work with them, they have never hesitated to withdraw a particular regulation and modify it if there is a constructive feedback. They have never said that here is the regulation, you follow it or you take it or die. That's not been their approach. They have never hesitated to accept constructive feedback and make amends to the regulations. I think that's a very positive takeaway, and I hope that culture of accepting constructive feedback and making amends to the regulatory framework which they set out should continue for the foreseeable future. The other point which I'd like to mention to all of you, which I think you should be conscious as internal auditors, there are lots of regulatory changes which are happening, all of which will have a substantial impact in the business. And in the boards where I have been there or other organizations where I'm an observer, I'm yet to see internal auditors evolve beyond the traditional type of risk-based practices. With IFC, I think we have seen some change in the last 10 years. But what the boards, audit committees expect is much more than transaction level compliance aspects. They expect something much more. Like, for example, what Mr. Muruganandam mentioned, and sorry to repeat that example of that supply chain aspect. So you don't have observations like that forming part of the report and getting highlighted for a debate or a discussion. I'm sure organizations have customer risks, concentration risks, key management risks. So those are also risks which we are aware, but to what extent do we put it in black and white and make it a point of debate is an important aspect. While on this, I want to also bring to your attention, not just in India but across the world, and I represent a company which is part of a SEC listed company. There's a wave of making the statutory auditors to work more closely with internal auditors than ever, and for the statutory auditors to comment or rely on the work which is done by the internal auditors. You are all aware that in the context of the new CARO which came into existence last year, the auditors were required to make a specific comment on the observations arising out of the internal audit. But last year was a transition year, and I don't think there was much engagement or formal plans between the statutory auditor and internal auditor to discuss on the areas of coverage and risk assessment. But the idea is both of them should work in a cohesive manner. My own view, if fraud risk has to be reduced, it cannot be avoided. Fraud risk has to be reduced either through effective preventive controls or detective controls. That is possible only through good internal audit. Statutory auditors, while people always tend to put the finger on statutory auditors, it is just not possible within the audit framework for statutory auditors to detect frauds. And that responsibility has to be shouldered only by internal auditors. Pardon me for making this statement. If you look at almost all the failures which have happened in the public domain, the burden has been carried by a combination of the board of directors, management, and statutory auditors. Nobody has actually gone to point fingers at the effectiveness of internal audit. That day will come now. There is an awareness about this function called internal audit and the responsibilities they're supposed to do. There is that awareness which is coming up, and it's just a matter of time when people will ask the first question on what happened to internal audit before they go to the remaining. And that's the future of internal audit. It's both the opportunity as well as a risk which we as a profession need to address. And lastly, friends, as I conclude, I'd just like to share with you on a very personal note. Please feel free to reject it, but it's my very, very personal experience. Over the past 30 years, as I've seen business practices, professional practices across the country and little outside of India as well, I see a social factor which is also contributing to the risk in a business, be it a management failure or a fraud risk to happen. We have all had a societal system of joint families, moving to nuclear families, and today we are all witness to situations of what's happening in Delhi and other places, living, whatever terminology you might call it, all of this social change which has happened. The takeaway for us there is, you have a set of individuals, whether it's 30s, 40s or 50s, whatever age, who find themselves difficult to be accountable to their family itself. When somebody finds it difficult to be accountable to the family itself, the partner or spouse, children, parents, if somebody feels that he or she is not accountable to the family itself, and the same person is running a large organization of 10,000 crores, 20,000 crores, or whatever number, for that person, they having leadership roles there, to expect the same person to have accountability to a set of unknown people, investors, stakeholders, and those, I think it is excessive expectation. So you have this societal change which is there, and it's, in fact, when I was in Sundaram Finance, the credit was always based on the individual, the borrower's personal credentials, not based on balance sheet numbers and all. And that's the secret of Sundaram Finance success. And I have always done my businesses and investments associated always with the people, how good the people are. And that fabric is changing. I don't want to name individuals in the global environment who have acquired companies, given up, all those, some of the recent transactions, whatever color tick, all those behavioral aspects, and the people who suffer losses due to that. You actually are walking into an ecosystem of society where that risk is also a very high risk, and it's very difficult to deal with those risks. So how to deal with that is also a problem statement for the future of internal audit. So thank you all for your patient listening. Pleasure to be part of IAS event as always.
Wow, so fantastic words of wisdom, sir. Thank you. Like always, a man who makes you introspect, warns you, cautions you, prepares you for another exam another day. So now with that, I was a bit stunned to know that he's answered almost the 5 questions which came to me. I didn't leak the exam questions, but that's his talent. So before I take these, because I think most of them to some extent have been addressed, anyone from the audience has any specific questions for this panel, please? Anyone?
So your question on the social fabric change was confined only to the leadership of organizations. Do you think it is applicable to everyone now?
It's applicable across.
So the background checks are...
For example, background check is one aspect which, as an internal auditor, we will have to be very careful about doing every now and then, sir. Any thoughts?
We have to do that. Say, I'm not into the process of how do you address that, but I just wanted you to be cautious about this risk becoming a fairly big risk. And also let's understand the fact that when you look at talent, organizations want people talent. You'll choose among the best who are available. So if you're going to spend all of your time on people having good individual ethos, you will not get the talent for running the business also. So that's also a dilemma which organizations will have to deal with. So it's not confined to the top, it's across as well.
Sir, I've been in this profession for past 30 years. And I've been witnessing the change. Ever since the transaction audits to operation audits, we have gone miles, okay? And the expectations are keep on increasing. One thing has not changed, according to me. I worked in both MNCs and as well as Indian companies. The top management's view about internal audit. See, the expectation, one side you have greater expectations. On the other side, the management, you always talk about seat at the table, everything is fine. Skill sets of the internal auditor, you develop yourself, you make yourself available, all this fine. But whether the senior management is really looking at internal audit that way, when they are providing the opportunities to them or sharing the information with them or treating them as part of as a business partner. We also call ourselves business partners. But I don't think any business is looking at us like a business partner, except some matured organizations. I'm just discounting them. Majority of the organizations. Now, there is a big gap over here. How do we address this? Because there are a lot of youngsters here. And they are going to face the same problem. Data not made being available, not full information not getting shared. How are you able to go and justify your expectation? You go to the board and ask them, the board gives you so many things. And when you come to the thing, the senior management spends time with us only during audit committee or during our audit plan. Okay, how are we going to manage this gap? We are one side keeping on building up our technology, building up our skills, everything is fine. As a CFO, sir, I would like you to answer this question. How to do this?
In our excitement, Suresh, I remember. Yeah. Correct. Correct. I agree, Tyagarajan, and same true for statutory audit also.
No, at least they are worried because when you say even one other matter paragraph you want to include, they are so much agitated, they come to your lines in terms. Correct. But that's not the case with the internal auditors.
Correct. So let me answer this in two parts. So one is, I think, empowering the internal auditors through a framework so that there is more management attention towards that. A good example of this is what CARO has now done, where statutory auditors are required to comment on the internal auditor's work. And as Tyagarajan just mentioned, anything which goes into public domain in the form of a reporting, managements take note. So if the internal audit observations are such that the statutory auditor will take cognizance and report, I think that's one part. But let me address the ground reality. I myself have been in the same shoes which you mentioned. I have been an internal auditor. I have gone to committees, presented, heard, not heard, data challenges. All of this I have gone through. So no different. And I'm sure in my organization, I'm sure the auditors also must be facing some degree of challenge. Maybe 20%, 30%. It's not that it is not there. So let me acknowledge that to begin with. The way to solve it, and I've experienced this myself, is, as far as the management's conversations are concerned, it's a question of the quality of conversations or the topics of conversations which we have. Don't get me wrong, and I have done this. I have also done a similar behavior where I get excited with some revenue not getting recognized, some cost mismatches, some excess payments, some vendor documentation. There was an age when I also used to get excited and used to include it as part of the audit reports. It used to be there. But for the management, while that is important, they believe that there are people at the middle management, etc., who are responsible to take care, and they will take care of the same. But for the senior management, what makes a difference is conversations which are at a more strategic level. At the cost of repetition, the same supply chain management risk, customer concentration risk, key management personal risk. So those kind of conversations, and always we talk about anyone in the organization, for example, when you are trying to get the CXO level time, we call it elevator pitch, or that you just get that 60 seconds, 90 seconds attention. But once you get that 90 seconds, after that you may get 1 hour. But you have to cross that 90 seconds. You should be able to catch that. So the ability to communicate during that period, and that's a skill set. And more often than not, I've found that the business understanding has been sort of limited as well. The focus is more around compliance with a set of laid down procedures, requirements of legislations. So it's more around that rather than a deeper understanding of business. You don't come across many times auditors who can talk to you on market share. So, because you should look at the profile of the senior management. What is bothering them every day? What is bothering them every day is about market share, competitors, new technologies. It is that. So the ability to build conversations around that, consequently to get some time and then discuss other aspects is important. Take, for example, as a finance function itself. If you were to discuss with somebody in a production function, operations function, unless you are able to speak their issues, their language for some time, for you to get their mind share and speak about what we want to tell will not happen. So it's a classical problem which is there everywhere. And that's why we all keep saying that soft skills are important. And it comes out of experience over a period of time. But it is also a function of the quality of the senior management also. I am seeing a shift where whether it's boards, audit committees, or senior managements, giving more time for internal audit. In fact, just to answer Tyagarajan, Mr. Muruganandam was talking about his experience probably in his relatively younger days when he was on the board of some companies. Maybe 10, 15 years back, he would have been on the board of few companies. Now, as a finance secretary, given his seniority, I'm sure he's not engaged those. At that stage, probably it was true where it was passed over and things like that. But I don't think these days boards have the courage or audit committees have the courage to bypass an internal audit function. And in many cases, transcripts are there, they're maintained. So people are pretty careful. I'm seeing, I'm sure in your organization you'll see, audit committees typically are spread over 2 days. Previous day for other than results, next day for results. I recall days where audit committee used to be 1 hour. Now audit committees between previous day and next day is at least 6 hours, and it is pretty intense. So I think we have moved. It's a journey. I don't think it is as bad. One thing which Suresh we should understand is we have a legal requirement that internal audit is mandatory for all companies above 25 crore, whatever number. I think for those organizations which are 50 crore turnover, 100 crore turnover, 200 crore turnover, there the management or board, they know day in, day out what's happening. So for them, they are unlikely to spend more than that few minutes because they know, they are hands-on, they're hands-on. But when you do internal audit of a company which is 5,000 crore, 10,000 crore, there I'm sure the boards, audit committees, senior management are spending time because they know that this is a very effective tool for protecting themselves also. So that's the difference. So if you find a 50 crore company not spending time on internal audit observations listening, I don't think we should get too disturbed about it. We should just look at have we done our job well, and are we supporting the cause of that organization working in a relatively low risk environment. That's my answer.
So thank you so much, sir. This is a typical CFO's reply, senior management. So no, I'm sorry for want of time. I would like to just say that it's not about what you want to say, it's about what they want to listen, right? So while he says we need to be better speakers, I think management honors, and I hope regulatory change doesn't enforce that. So on that note, thank you so much, gentlemen, for this vibrant session, and like to call on to do the honors, please.
Thank you.